It's yet another super exciting time and, in fact, insightful time on MSME Africa Enterprise Chat. This is me welcoming you to the program today. I'm your host, Ara Nimi. Yes, we're looking at what really affects businesses in Nigeria, in Africa, and across the world. Today, we're talking about something that's quite important: understanding government tax policies. Akinjide Akande is a seasoned tax specialist with over 13 years experience in various aspects of Nigerian tax. I'm going to leave that to him so that he can do more of introduction of himself. It's good to have you on the conversation today. Thank you for joining us on the Enterprise Chat. Please, could you just tell me briefly about yourself and what you do?
Thank you very much, Aravide. My name is Akinjide Akande. I've done taxes for um, some years, a little over 12, 13 years, both as a consultant and as a staff, an employee in the financial sector. I work with Stanbic IBTC Bank before joining EcoBank, where I am presently as the manager in charge of taxes. So that's it.
Okay, thank you for that intro. Quite a lot. I mean, you're really into this whole thing. So let's talk about, because we were looking at, understanding government tax policies that apply to your business. I know a lot of people do not like to hear tax. They don't like to hear the idea of tax, paying taxes. But of course, let's get down to the concept itself. What exactly is the concept of tax policy?
So I would answer in two ways. Taxes are compulsory levies. That's a theoretical explanation or definition as well. Taxes are imposed by the government of every country, collectible from taxpayers. So myself and you and corporate entities, they are all taxpayers, and they are to be paid. But I mean, they have to pay taxes as imposed by the government. We have different type of taxes. There are indirect taxes, there are direct taxes, there are income taxes, there is transactional taxes. There is a lot of taxes all over the place, but primarily taxes are imposed by the government, and the major reasons why that would be is that they use it to handle the economy, like income redistribution, to provide basic amenities like public utilities to the enjoyment of the same taxpayers that contribute to taxes. So that's basically it. So tax policies uh, are those set of rules and principles and guidelines that the government puts in place for the imposition and collection and monitoring of those taxes. So you legislate a law a tax law into existence and say these are the set of rules that taxpayers must abide by. If you are working in a particular sector, this is how much tax you pay per period. And then, so that's the whole body of tax policies. There are guidelines and rules that define how much taxes are to be paid and by whom and through which channels. So that's briefly a summary of tax policies. So there are those guidelines that the government put in place for the imposition of taxes.
Amazing. We need to also understand, the examples of these government taxes that we have, these government tax policies, and how they directly affect micro and small size businesses. Really, that how do these policies impact the operations and strategies? The administration of President Bola Ahmed Tinubu, I think he's really serious about tax, and in Nigeria, he's come up with some reforms, some policies. Let's speak to that.
Okay, so any responsible government in any place in the world would be serious about taxes. As I earlier mentioned, it is one of the primary tools that government use to control the economy and to raise revenue. Because, like I said, the government is in the business of providing public utility, but of course, the government does not really earn any income per se. So, how they do that is to get taxes amongst the other revenue lines. But taxes is one of the major drivers. In fact, there's a tax budget every other year. So every year to say this is how much we are expecting in internally generated revenue, and tax is one of the major issues there. So to correct you a little bit there, the president has not really made any reform because it's not really within his purview to introduce new taxes or new. So he can offer directions. He can reconstitute tax boards or give a particular committee some powers to do things better. But yeah, you are correct. Looking at his antecedents and how he was focused on generating revenue from tax when he was Lagos State Governor, you would know that he's a bit particular about that. So to your initial statement, linking it to the present administration, yeah, the government is particular about taxes, and they are going to be looking at making sure that taxpayers pay as at when due and the amounts that is due. So every business owner should be prepared to really preempt where the direction is going as it relates to taxes. So what I mean is that in setting up your business, if it's a new business, or in restructuring your business that's an existing business, or in making certain decisions, you should consider the tax implication of those decisions.
Yeah, but
And
let me come in a little. I actually want you to speak directly to the examples of government tax policies that we have, and how they directly affect micro and small size businesses. You've spoken about different types of tax that we have: income tax, transactional tax, and what have you. For businesses, for medium and micro and small size businesses, what are these government tax policies that directly affect them?
Okay, so if I understand you correctly, the specific policies. So like I said, there are guidelines to how people would pay taxes that would inform their tax culture. So in a nutshell, there are existing incentives within the tax law. Like I said, there are regulations put in place by the government to say this is what you do, this is how to pay taxes. If you are fall within this bracket, this is what to do. So for instance, I'll mention one. Before now, some years back, the company income tax rate was 30% flat, no matter which bracket you fall into. But subsequently, we had a Finance Act 2021 rather, that said that then categorized companies that says this is a large company, and then this is a medium company, and then this is a small company. So it depends on where you fall, and that would be based on your turnover. So if your turnover is less than 10 million, 20 million, 25 million, there are implications to that of that within the tax law. So if you have 100 million naira revenue and above, then you pay a 30% company income tax rate. That means your taxable profit will be taxed at 30%. If you are below that, a medium scale, you'll be taxed at 20%. And then if you are a small company, you'll be taxed at a particular, those are the things that are available within the law. So I need to make mention of something. There are two things that each business owner need to be particular about. You need to have a knowledge, a basic knowledge of their available incentives and the tax law and the tax rates that apply to your business, whichever category you fall into. And then you need a tax advisor. I mean, somebody that is an expert on the field that would be able to tell you when new developments arise in the tax environment. People that you can run to and say, okay, I want to do this. This is what are the implications of this and that. So there are different incentives available for that. There's also the pioneer status that you can apply for if you qualify with the Nigerian promotion NIPC that you can apply to as if you have if your product or whatever it is you are selling falls within that particular range, and then you can get a tax holiday of 5 years and then further extension, as it were. So those are the things that like I said, every taxpayer need to know to say, okay, if I do business this way, this is the incentive that I can get. And I mean, their tax advisors are also there to give a cushion, just a second opinion to that. Yeah.
All right. So I also want to look at, how businesses or business owners rather can, navigate the challenges of complying with seeing that we have the federal and state tax regulations. So how would businesses, how are they able to navigate these challenges of complying with both the federal and state tax regulations, especially when they have different requirements?
Okay, so it takes me back to the point I made about knowledge. You need to know all these laws. Yeah, you need to know how your business is structured, and you can't know it from inception before the business or during the business. If you are already in the business, state laws cover some part of some kind of, like I said, tax are different kinds. Yeah, so your company income tax, for instance, goes to the federal government. Your personal income tax, like maybe say you have employees within the organization, like you want to pay them salary, you are obligated by law to deduct a particular uh, amount of tax and pay to the state where those employees are resident, right? So there's a way to navigate, which is, first of all, the knowledge. You need to know which government authority or which tax authority regulates what. So you know that, for instance, your value-added tax goes to the federal government, 100%, right? It's at 7.5%, know the rate, and you know that it's payable to the federal government. Then you know that the only business you would have with the state tax authority, if you are a corporate entity, which, I mean, you are a limited liability company or a PLC, as it were, it would be in the aspect of, say, maybe the taxes from the emoluments earned by your employees, or say, if you are in the some certain sectors, maybe consumption tax, or if you are paying rent, for instance, and then the landlord is an individual state where you are carrying on business, you know that the withholding tax, which is a percentage the rent amount that you are paying, needs to go to the state. So knowledge first, and then you need an advisor or somebody that will be able to say this is what goes to where. So if the whole thing about tax or compliance is you need to know what to do. If you know what to do, then the rest of the conversation is easy.
So speaking of knowing what to do, because you've spoken about the knowledge and getting a tax advisor. So speaking of knowing what to do, because the tax landscape is constantly evolving, right? So how does a business owner now stay updated on the changes to tax policies that could actually impact their own industry? Can you provide like an example of how a recent tax policy change and its effects?
Okay, so sometime in year 2020 or 2019, I can't remember which exactly, the government started a process that's internationally recognized process of initiating what we call a finance act, right? So a finance act looks at the totality of the tax system, and because it takes time to amend a particular law, like I said, taxes are based on laws that are enacted at National Assembly. So if you want to review a particular tax law to update it, we call it an amendment. It's a process called amendment. If you want to amend a tax law, it takes a while. It takes a long time. It takes consultation. It takes looking at where the problem is and making sure that in trying to amend the law, you do not put you do not create more problems. I mean, than it was in it already. So because of that, the Finance Act is like a shortcut that allows the government to then look at the totality of the tax and then seek to put some amendments on in some key areas that has received attention from, say, taxpayers. There are always areas where taxpayers and the tax authorities differ on interpretation. It's always an interpretation issue most times. Yeah, so there's a particular law that says take 5% of a particular amount as tax, and then the taxpayers think it is 5% after you deduct a particular amount, and then the tax authority is saying no, it has to be 5% on the gross. So the Finance Act comes up every year. So that's first tip. Every taxpayer needs to know that, see, uh, the federal government has initiated that process, and then since the time it started, it has been consistent. So the last one was signed into act before the president left, the former president left. So unlike before, the tax information is available in the public space. You can actually, at the comfort of your room, in your office, look at what has changed. You would see you'd see publications by the Big Four, the tax consulting agencies, consultants in Nigeria, tax consulting firms in Nigeria. You'd see the likes of KPMG, PwC, Ernst & Young, and Deloitte. They publish these things to say, okay, guys, this is what has changed. In fact, you see some in the public space like Punch and Guardian. They might not have expert opinion like the Big Four and the other firms, but of course they would be able to inform you that something has changed. So every taxpayer should anticipate that there will be a change every year. I mean, right from the time this Finance Act started, and then anytime there's an update or an amendment to any particular law, there's a modification order, there's an order that's released, there's a publication. It's always announced, it's always publicized. A lot of people, and then taxpayers should endeavor to go on training. So, yeah, there are legal, tax firms that organize academies, that organize monthly breakfast sessions for professionals and for the industry. So those things are there, and like I said, the information on tax is everywhere. It's available in the public space. Yeah.
Okay. Thank you so much. Very robust response that you've actually given. I want us to also consider, some businesses who might be thinking of, expanding into the international market, or that they're already playing in that sector. Could you outline the potential tax implications and strategies that they need to manage these global tax responsibilities?
Okay, so that's a bit advanced, and because the implications are not as straightforward as when you are conducting business in Nigeria. So, I mean, if you zone into the specifics, then we can start talking about technicalities of this transaction with a foreign vendor. Because if you want to expand your business outside the country, chances are you have foreign counterparties that you transact business with. So you'd have to start asking your same question: does withholding tax apply to this? Because this guy is not even resident in Nigeria. The person I'm paying is not resident in Nigeria. Why do I need to withhold tax from what I'm paying to the guy? And then it's murky waters, if you ask me, because then you need expert advice. You need, I mean, the best advice I can give the person is to get an expert opinion on that matter, because even some of these, if you ask some of these tax firms that are professionals, if you ask them about a particular case or a transaction that a company is about to enter into, you might be shocked that you'd have a slightly different opinion. Yeah. So because there are cases where it is not as straightforward as, oh, this is 7.5% of VAT, this is vatable, this is not vatable, this is taxable, this is not taxable. You might have to have an expert opinion that will look critically into each case and treat it on a case-by-case basis. Because if you transact business with a particular vendor that resides in Ghana, the tax implication might totally be different from when you transact business with a foreign company that's resident in London. So you need to know what exactly. It has to be on a case-by-case basis. So there's nothing wrong with expanding, but like I said, you need to factor into consideration that some of your counterparties that are non-resident in Nigeria would not want to pay Nigerian taxes because there's no benefit to them in it. And then you might have to start taking bearing tax burdens on behalf of non-resident companies, which would definitely have another impact. I don't want to go into technicalities here on your own tax compliance. So those are the conversations that you need to have if you are trying to expand into international waters. Yes.
Thank you so much for your response once again. I also want us to look at, some of the most challenging aspects of ensuring compliance with government policies for businesses. That's government tax policies. How would you address these challenges? I recall last year during a presentation by the World Bank, they spoke about trust issues, trust deficit, why the government is unable to generate tax revenues. How would you address these challenges? What are some of these, most challenging aspects of ensuring compliance with tax policies of the government?
Okay, so you've answered the question for me, so I'm just going to follow your so it's trust basically. So there basically three reasons why taxpayers try to comply with tax regulations. So one is, okay, I don't want to be penalized. Yeah, that is the most basic pedestal. You know, you don't want to be seen that you are not paying the taxes and not get penalized or sanctioned as well. Now, away from that, like I said, taxes are meant to provide public utilities for the benefit of the taxpayers, right? So then the question people get to ask is, all these taxes we are paying, said, where is it going, right? So you hear it a lot, and so I mean, from a tax person's perspective, when you're trying to tell people they need to be compliant, that they would ask you pointedly, what is the benefit that I'm deriving from even paying these taxes? So, you know, this guy is driving on the roads, and you can see that the roads are deteriorating every day, right? And then you're asking him to pay taxes, and then he's not, he's going to pay taxes at work, and then he gets home, and there's no light, you know. So those things then impair taxpayers' tax compliance culture. So you see more people being reluctant to comply because, and the ones that are actually compliant, yeah, 90% of them, of a very huge percentage of them, are compliant just because they do not want to be sanctioned, yeah, or because they've had an experience where they sent them a tax ticket to come and pay some millions of naira, and they don't want to be caught doing that again. So, and that is against the major spirit of paying taxes, because it's supposed to create public utilities, but you are supposed to be able to see that you are getting the right benefit as it's intended to give to you as a taxpayer. So it's a profound issue, yeah. So government needs to be responsible, right? They need to make sure that to an extent, yeah, I mean, the economy is improved in such a way that, I mean, it would show that the tax that has been collected is put to good use. And then the accountability, you need to show people, you know, sometimes you see figures, the FRS has met its targets this year, surpass its target by 50%, but then you don't see it in the lives of the people that are paying the taxes, right? So all these things impair the tax-paying culture of people. So people would more likely comply because of fear, not because of the benefit they derive from it. I mean, a lot of people want to pay taxes in the United States because they know that if they go there, they'll get the benefits straight, just being a citizen of the United States of America. And that's in an ideal situation where things work. You, even if you are resident in Nigeria, you are required to pay some form of taxes because they know that the benefits are with you there anytime you need it. So that's basically it. You've actually answered the question for me.
So before we actually wrap up, there's a question that I actually want us to touch on before I ask you my final question. So if a company is subjected to a tax audit, which is of course, normal, how should businesses prepare their company to ensure a smooth and successful outcome? Because I think quite a number of businesses actually falter in this regard.
Okay, so tax audits, basically one word, proactivity, right? Be prepared. If you react, you get into trouble because everything is time bound, and then unfortunately, right now, the economy is so bad that everybody is looking to collect more. I mean, every tax authority is looking to collect more that they should collect. So one thing is to be prepared, right? Prepare your books in a tax efficient manner. Make sure you comply with the laws, and then make sure that you keep adequate documentation. That's all about tax audit. If you want to come out of a tax audit blazing, clean, all you need to do is to make sure that you have your books in order. I keep telling people, I say, sometimes we do not keep records, and then we inadvertently shortchange ourselves, and I'll explain to you why. Now, it is very common with small businesses when you are making revenue, you're earning revenue. It's very easy for you to think you are making profit. Yeah. So you make your business calls. I keep saying to people, you need to separate your person from your business. If you're a small business owner, so the tendencies are very high that you would make your business calls on your personal phones. You put your earnings into your business in your personal account because maybe network is down. Your business uses a particular XYZ bank, but because network is down, you just say, oh, please transfer it to my personal account, right? So during the tax audits, when they ask you to provide your bank statement, maybe somebody dashed you money of 500,000 naira along the line. Yeah, you have taken it into your business account. Then you are now required to prove that it is not earning into your business. So it makes your case complicated. Then you need to now start justifying why you have a personal inflow that's supposed to be for your person into your business account. So it makes your audit, and audit is about evidences. Yeah, if you are able to provide full evidences that this is what I earn, then you have paid the right taxes, you come out clean. I keep saying to people, and I've had it before, there are tax audits where you come out and you have zero liability. You don't have any payable. In fact, there are tax audits where you go in and then by the time they look at your review, they will not come back again because you are probably in the credit position. And to my initial point I was saying, separate your person from your business and make sure that you record painstakingly all the expenses in your business. So when you make a call to Aramide Folorunsho, that's a business call, it might be ridiculous, but it's a lifesaver. Have a note that you put in. I made a call of 6 minutes 30 seconds to Aramide Folorunsho in respect of this business call. That is an expense that should go into your account. So you might not have an audited financial statement like big companies, yeah, but you have a statement of account. You have an account that says, okay, this is my business this year. This is how much I collected from Alhaji Dangote. This is how much I earned from this. This is how much I earned from that. So a lot of people record those earnings as revenue, but they forget all the costs that they make to the petty businesses, to Aramide Folorunsho. They forget all those launch, yeah, that they pay for during businesses. So invariably, what it is then is that you have taken a revenue of 10 million and you have incurred a cost of 4 million, but because you failed to record those expenses, you would be deducting about 2 million naira from your revenue and then be getting a profit of 8 million. Meanwhile, your profit is actually 6 million. And tax is based on your profit. So you are overstating your profit, as it were. So it's very easy because people don't separate their business from their person. It's very easy to model up. So you carry out business from your parlor.
Right.
There's a rent that you are paying that you can prorate and say, out of this rent that I'm paying for my personal use, this particular space is some square meter, and I use it for business throughout the year. So that is a business expense. It's a valid business expense. You can say, okay, oh, this is my car. I use it for meetings and all that. You can, to a reasonable extent, figure out how much expenses that you are incurring that is not written, right? So for tax audit, if you have all your files and you have the phone bill, you circulate. They collect it from you as ridiculous as it is. You buy fuel, you have the stop, you keep it. So during tax audit, by the time they see the overwhelming evidence, they can tell that this person knows and is being proactive about tax.
So if you do not have all of these documentations and the evidence, like you called it,
yeah,
what might be the likely consequence?
You would have forgotten. So the consequence is that your tax will be high because you that incurred the expense have forgotten that you incurred it. And then they can say, okay, what we have seen, people in similar business, their taxes 500,000. Come and pay 500,000. And you cannot defend yourself. Like audits about evidences. You can say, okay, no, I don't know what the other person does, but this is my account. This is everything I spent. So my profit is actually less than what you're seeing. So don't look at my revenue, don't look at my inflow, because the tendencies are they are going to look at your inflow in your cash statement, in your bank account, and say, oh, you made this amount. You say, yes, I made it, but don't forget that I spent this too. So as long as your tax is on your profit, then it reduces the profit that you have to pay tax. In fact, some people are running business at a loss, but they think they are making profit because they do not factor in all their expenses. It's a very common thing.
You just shared deep insights, in your last response. And I hope that businesses will learn from, or they have one or two things that they can pick from all that you shared, because they're really very important. So let's look at the Presidential Committee on Fiscal Policy and Tax Reforms, which is headed by Taiwo Oyedele. And, recently they were inaugurated by President Bola Tinubu. Let's talk about, what should be the focus of this committee, particularly as it relates to MSMEs and businesses, small businesses in Nigeria.
Okay, thank you very much. So the focus is clear. There's a big job for the committee. They have to be progressively tackle all the issues. I mean, a lot of the issues that are already in the tax environment. Yeah, make sure that issues of multiplicity of taxes is addressed. Make sure that the economy is bettered by the tax policies, and then the good thing is that the person that's chairing the committee is someone that's been advocating for the same thing over the years, and so I mean it gives a level of comfort. And then to make matters better, he's not just a tax person; he understands the dynamics of economic development. So and you can see from his utterances and then the statements, just these few days that the committee has been set up, he understands what needs to be done. And then, so I have a very, 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 very huge belief in that particular committee, because definitely somebody that has been at the forefront of bettering the tax environment for a while. And then I think it's a good step, and it can only get better from there.
Yes, thank you so much for sharing your thoughts and your insight with us today. But I don't know if you have final words that you want to share in roughly 30 seconds before we wrap up the show.
Okay, yeah. So just a recap. It's going to get interesting. The government is going to demand for more taxes, and yeah, we have seen different moves that show that like the last question you asked me, the person in charge knows what to do, and it would definitely cascade down to the minimal. I mean, the lowest base, and it would definitely mean that taxpayers need to be more compliant. And so the advice is businesses need to be proactive. Do not be caught pants down such that you have to react. You need to look at your books well. If there are areas where you are not tax compliant, you need to quickly fix it. You need a partner, an expert that would take you through the basic steps. Quick wins. I mean, people who have done it for a while that you can partner with and ask pointed questions, and then you need to have tax at the back of your mind in entering into transactions, in your business formation, in your business restructuring, in picking products, in entering into agreements. You need to have a mindset that there are tax implications to all those decisions. And I think if you are proactive in that way, it will help your life and save your business. Thank you very much.
All right. Thank you so much, Mr. Akande. I think in all that you said, this is where we get to marry what the relationship and the roles that the government and the governed have to play. So the government has a role to play. The governed also have a role to play. As much as there's trust deficit, the government also needs to ensure that they put the taxes they are collecting into use. People want to see what they are paying their taxes for. Thank you so much for sharing your insights. We've been talking about, understanding government tax policies that apply to businesses, particularly MSMEs in Nigeria. And I've been speaking with a tax advisor, Akinjide Akande. Thank you once again for joining Enterprise Chat today.
Thank you very much, Aramide.
You're welcome. So this is where we draw the curtains. As always, we really appreciate you for spending your time with us. Thank you all so much. I am Aranimi. So don't forget, you can connect with us on our social media platform on Instagram, Facebook, and YouTube at MSME Africa. Until we see you next time, do join us again.